am Genevieve Ling Xin Ying with metric number 273158. I will continue the presentation with written financial statement for Automobile Workshop Sdn Bhd. In order to prepare a proper set of financial statements for Automobile Workshop Sdn Bhd, there are three statements that need to prepare. The first one is the statement of profit or loss and other comprehensive income. The second is the statement of changes in equity. The third one is the statement of financial position. The first financial statement for Automobile Workshop Sdn Bhd is the statement of profit or loss and other comprehensive income for the year ended 31st December 2019. Service revenue is 215,000. There are 5 expenses such as wages expense, utility expense, rent expense, insurance expense, and other expense. The total expense is 100,000 and 200. In order to prepare a net income is the service revenue minus all the total expense is 100,000, 14,000, and 800. The statement of changes in equity for the year ended 31st December 2019. The net income is 114,800. The investment in business is 179,000. And the capital in 31st December 2019 is the total of net income and the investment in business, which the number is 293,800. Last financial statement for Automobile Workshop Sdn Bhd is the statement of financial position for the year ended 31st December 2019. Non-current assets consist of building and equipment. The total of non-current assets is 272,300. The current assets consist of cash, billing due from others, suppliers, and the total current asset is 52,500. The total asset is the total of the non-current asset and current assets, which is 334,800. The owner's equity consists of net income, investment in business, and the owner's equity is equal to the capital in 31st December 2019, which is 293,800. The current liabilities is the amount owed to the others, 31,000. The total owner's equity and liabilities is 324,800.
The importance of financial statements is it is fully and systematically reveal the financial status, operating results, and cash flow of the enterprise in a certain period, which is helpful for the management personnel to understand the completion of each task, index of the units, evaluate the management performance of the management personnel so as to find problems in time and adjust the operation direction. It helps the management to understand the position, progress, and prospects of business vis-a-vis the industry. With this information, the management can formulate appropriate policies and courses of action for the future. The management can also make suitable changes in the policies to avert unfavorable situations. It is helpful for the National Economic Management Department to understand the operation of the national economy. By summarizing and analyzing the financial statements provided by various units, we can understand and master the economic development of various industries and regions in order to macro-control economic operations, optimize resource allocation, and ensure the stable and sustainable development of the national economy. It is also beneficial for investors, creditors, and other relevant parties to grasp the financial status, operating results, and cash flow of the enterprise, and then analyze the profitability, solvency, investment income, development prospects of the enterprise, and invest, loan, and trade provides the basis for the decision making. The lenders and creditors can know about the liquidity, profitability, and long-term solvency position of a company from the financial statements. After the examination of the financial statements, they will decide their future course of action. The importance of the financial statements to the shareholders is the shareholders can know about the efficiency and effectiveness of the management and also the earning capacity and financial strength of the company. The shareholders will make decisions about investment in the company based on the financial statements, as the shareholders could ascertain the profit, earning capacity, present position, and future prospects of the company from the financial statements. Lastly, it is conducive to satisfying the supervision of business management by the finance, taxation, industry and commerce, auditing and other departments Through the financial statements, they can check and supervise whether each enterprise complies with various national laws, regulations, and systems, and whether there is tax evasion. The government will use the business performance of this company in various sectors to evaluate the economic performance.
In accounting, adjusting entries are the journal entries that are made on the last day of an accounting period to ensure the accounts are in line with the accrual method of accounting and the matching principle. The benefit of adjusting entries is to help the company calculate the exact revenue and expenses, update financial statements, and fix errors. There are a few types of adjusting entries, for example, prepaid expenses, unearned revenues, accrued expenses, depreciation expenses, and bad debts expenses. First of all, prepaid expenses are the advance payment of future expenses and recorded as assets when cash is paid. Next, unearned revenues are the advance receipt of future revenues or cash received in advance of providing services or products to customers. Moreover, accrued revenues are unrecorded revenues that have been earned and for which cash has yet to be received. The meaning of accrued expenses are unrecorded expenses that already incurred but not yet paid. Depreciation expenses are the amount deducted from gross profit for a reduction in value because of the age or how much the item has been used. Lastly, bad debts expenses are uncollectible or doubtful accounts expenses because the goods and services has been delivered on credit but the customer failed to pay the amount owed. In this statement of accounts, we can add on adjusted entries before preparing financial statements. For example, the company's insurance for half a year is 5,500 ringgit. However, we already paid 6,000 ringgit. Hence, the prepaid expense is 500 ringgit. The company have not provided any service yet, but the customer already paid 3,000 ringgit for the service. Hence, the unearned revenue is 3,000 ringgit. Moreover, goods that cost 2,000 ringgit already delivered to the customers. However, the cash has not received yet. Therefore, the accrued revenue is 200 ringgit. Next, the company's water bill of 450 ringgit was owed at the end of a period but not yet paid. Therefore, the accrued expense is 450 ringgit. Moreover, a company estimates depreciation on its office equipment to be 500 per month. Then, the depreciation expense is 500 ringgit. Lastly, Mr. Ong passed away a few days ago, but he still owed a debt of 1,000 ringgit. Therefore, the bad debt expense is 1,000 ringgit.
One of the importance of adjusting entries is matching concept. The matching principle states that the expenses must be matched to the accounting period in which the revenue paying for them is earned. The financial records then communicate the activities that occur rather than the actual money that was transferred. The adjusting entries are very important to allow the accountant to communicate a more accurate picture of the company's finance. The owner can know everything that occurred during a period from the financial statement. A financial statement prepared without considering adjusting entries would misrepresent the financial health of the company. So the adjusting entries can provide a more accurate information about the financial health of the company. A proper financial statement contains three components, which are statement of profit or loss, statement of change in owner's equity, and statement of financial position. The proper financial statements are very important because it can accurately show the performance of business and the financial positions of the company. Besides, it helps all stakeholders to evaluate and take suitable economic decisions by comparing past and current performance. The statement of profit or loss is important because it shows the profit or loss which is gained by a business during a period. It contains important information such as whether or not your business is earning a profit and how much it is earning or losing. Next, The statement of change in owner's equity is important for the equity shareholders. This is because it shows the changes in the components like retained earnings during the period, and the difference between equity and debt shows the company's net worth. Lastly, the statement of financial position is important because it reports the amount of a company's assets, liabilities, and owner's equity during a period. It helps the user of financial statements to assess the financial health of an entity. It also assists to identify underlying trends in the financial position of the entity. When it is compared to its competitor, it can identify the relationships and trends which are indicative of potential problems or areas for further improvement.